Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 2nd, 2022, and I'm coming to you for the second time for the Tuesday live stream. Welcome one and all. So today we're going to be going over, as usual, our intermediate to medium time frame price action, and we're going to talk about the importance of the 100K marker for Bitcoin. So 100,000 US dollars per Bitcoin. Why that's so important. I'm going to show you something in the charts you probably haven't ever seen before. Nobody's probably talking about, but there's actually a technical importance to 100K, and we're going to talk about that. All right, so to get started, we're just going to look at the current price action, okay? And we're going to see how we're doing in our uptrend. All right, I do want to reiterate a few sort of unmistakable, incontrovertible points, right? Just to allay any confusion. We are and have been in an uptrend since July 13th. I will repeat this. We are and have been in an uptrend since July 13th. July 13th is right here. So however you'd like to read the price action from now since July 13th, you cannot deny the fact that we've been making higher highs and higher lows, okay? That is an uptrend, right? Obviously, you know, if you're subscribed to this channel, that I've been reading this uptrend like so, right? With this Elliott wave trend, I believe that we are in this primary wave 3, right? If this is a primary degree, just I default to the primary degree, by the way, for my Elliottians. I'm not looking at, like, you know, the actual sort of degree from the larger standpoint. I just say, you know, a default degree is primary. So this primary wave 3 is right here, obviously, okay? And so I would say that we're in intermediate wave 2, perhaps, or maybe intermediate wave 4 of this primary wave 3, okay? So yeah, that's that. It's still very important and significant to note, as I said this morning in the update, that every retracement up until now has respected the 0618 Fibonacci level of the previous uptrend, okay? So this uptrend 0618 is respected. This uptrend right here, pull your Fibonacci retracement tool, and the 0618 is once again respected. The 0618 is over here at 22,200, okay? And we actually topped, we turned around, it seems, at the 0.5 Fibonacci retracement level, as you can see here, right? So this is important for continuation of a trend. You know, if you look up and down Elliott wave theory, there are few, if any, instances where a trend breaks the 0618. So that golden mean is crucial to the continuation of a larger overall trend. And, you know, any successful trader, there are a few things that successful traders do if you study, because, you know, everybody has a different style. There's so many different ways to read a market, so many different techniques. And this is one of the reasons why I really appreciate the work of my friend Jack Schwager, a mentor and a friend who writes these Market Wizards books, okay? And in that, he does a lot of different, he shares tips and tricks in a first-person form from these market wizards, people who have a proven track record of over 10 years of winning and beating the market, okay? And some of the things they all have in common, it doesn't matter the style, the techniques, if they're day traders or swing traders, position traders, it doesn't matter. Some of the things that kind of all successful traders do, without exception, is one, they master price action. They use, a variety. Everybody has kind of a variety of indicators, using EMAs, MACDs, Ichimoku clouds. It doesn't matter, but everybody has mastered to some degree price action. So if you're interested in trading seriously, you gotta be able to not rely on your indicators so much that you're lost without them. Okay, so that's number one. There's a point to this, so stay with me. This is a live stream. We can kind of ramble a bit. Number two is they all are able to identify larger trends. It doesn't matter if you're a day trader or you're trading the minute chart. You should be able to read an overall trend. And so this is why I'm saying what I'm saying. If you want to take the risk and, make profit every day and, take profit every day, get into trades multiple times a day, that's fine. Some people are really good at that. Everybody's different, right? And that's a certain level of attention and stress that a lot of people can't manage, but some people operate better in those working conditions, right? But no one in their right minds can deny that you've made higher highs in this move since July 13th. That's a fact. That's a low, that's a higher low, and that's a higher low. It would behoove you, traders, chartists, to go long here, because we are at a significant resistance. This has been resistance since this point right here in mid-June. It was resistance once more on the 20th of July. It was resistance once more at the end of the month in July. What do you think happens when we finally break this? Okay? And this is why I said on Twitter, if you don't follow me on Twitter, go ahead and do so. I typically, I tweet about whatever I feel like, but I reserve my most detailed and frequent tweets for the market and my market analysis. So, in any case, I said on Twitter that this move, the break of this resistance band, here, let's put that in with a rectangle. It's not going to take us long, and it's going to be a lot more clear. Okay, the break of this region of resistance is going to yield, or it's going to bring on the first big rally of the new bull market. Okay, because if you're subscribed to the channel, you'll know that I don't think that this is a bear market rally. This is, to me, the first impulse of the new bull market. Okay, and so this right here, this third wave impulse that we are already in, by the way, but we kind of been stymied by this massive resistance at 24K. But breaking this 24K, 25K region will yield the first big impulse of the new bull market. And remember what happens fundamentally using Elliott wave theory. Most market participants do not participate in the rally before they observe that wave 3 impulse. I'll repeat. Most market participants fade the first wave and they sell the second wave, and they will miss the third wave and will not participate in the new trend until the third wave has printed. And what's going to likely happen once that third wave prints is we're going to get a major drawdown. Okay, and I explained that this morning why I thought we get that major drawdown, because I think we're in leading diagonal, and that's one of the reasons you get leading diagonals upon establishing a new trend. That people just don't buy the establishment of the new trend. Everybody's still kind of it's been going down, so it should continue to go down. But remember, since July 13th, you have yet to prove that you're in a downtrend. Okay, and you can say, yeah, it's just a market, it's a rally in a bear market rally, sort of a correction, kind of like what you got at 40K. But that doesn't really make sense when you look at the price action. It's possible, everything's possible, but it's improbable. Okay, so yeah, it's likely that people start to FOMO once we start running here. Okay, and then what happens is we dump for 10 days, 7 to 10 days, and retest this ever important level, this 24, 25K level that we've taken 50 days to break, right? From mid-June until now, it's been about 50 days. And so once we break it, because it was so strong as resistance, we're going to have to retest it as support. It makes sense. It makes so much sense to retest that in a three-wave move, a sharp move to the downside. Or if it's not a sharp move, it can be consolidation and then boom, a sort of an impulse like that. So like a complex wave right here, and that breaks down finally to retest this level before continuation of the uptrend. Okay, I would not be surprised if that happened. And if you take your Fibonacci retracement from the bottom of this wave 2 to some region up there, you see that the 0618, which we should not break in an uptrend. Okay, at no point should we break or breach the 0618 Fibonacci retracement in an uptrend. That's around here. It's very, very, very likely that you see this move. Would not be surprised if this played out. Okay, so I'm going to keep this on the charts for quite some time, until which point it's invalidated, of course, right? And everything here is probabilistic. We chart and we use insights from our charting for our trades, but trading is so much more than just guessing and going, right? There's risk management, there's hedging, there's sort of what happens when your trading plan, your trading thesis falls apart. What do you do? You know, all that stuff. So that's basically how I'm seeing it. Guys, if you got value, please like, share, and subscribe. I don't see anybody else talking about this in this way. And yeah, I think this kind of analysis is important. Let me actually check who's here. I haven't done that yet. Or that we're streaming. I could have been talking into the void. Let's see. Here we are. Okay, great. Looks like we are live. Please like the stream. And subscribe if you're not subscribed. Do all that good stuff. And yeah, hey Gene, what's up? Definitely let me know who's here. All right, so that's my take, my short-term take. You guys already know that. And then if you just zoom in just ever so slightly, I'm not exactly sure what's going on here. I think you got a mini reversal pattern here, but you have a nice rounded bottom here, right here. No, that's not what I wanted. I want it this way right here. Let's make that solid. Okay, you have a nice rounded bottom there. It's very likely that this is the bottom of this trend, this local trend, this downtrend right here, and that you're coming up and out of it, and you're going to break. If you break that 24.5, 24.6 resistance, look the fuck out. Like, you're gonna liquidate a lot of shorts, and that is, I mean, look, everything about this being the first major bull rally, or the major rally in this new bull market, is kind of aligning, right? You have massive consolidation. You're basically going to break 50 days of consolidation reversal. You know, all kinds of people on Twitter and elsewhere are saying, hey, you can't just up and go. Like, Bitcoin was down forever, and it can't just make a new bull market out of nothing. Like, it didn't start out of nothing. Like, you had 50 days of consolidation reversal in Bitcoin. In most other alts, you had 70 plus days of consolidation reversal, because May 12th was the orthodox low for most other altcoins. So you established a pattern of consolidation for a reversal of the larger trend. Okay, and once you get into this region, because you've been consolidating for some time, orders have been consolidating. Remember how this works, guys. Let's turn on our VPVR really quickly. So if you look and see, and let's actually zoom out for this point. Let's zoom out a little bit. You can see on the VPVR, which is the horizontal volume indicator, okay, it shows you all the buying and selling done at certain price points. Look at what happens once you leave 24K, right? Around 24K, look at what happens. There's nothing going on here. Nothing. Absolutely nothing. This move out of here is going to be violent. I know I've been saying that and hasn't yet happened. It's because I'm not a magician. It's going to happen soon. And when it does happen, it's going to happen even faster than it typically happens, because there have been 50 days of people saying, I'm going short, this is a fake out, this is going down. They've been accumulating short orders, okay? So all these accumulated orders are just waiting to get hit once we get into these areas, okay? So there's that. There's also the fact that originally, when coming down to this level of 18 to 20, 22, 23K, we kind of just came down and there wasn't much time for people to buy this up, okay? It's imbalance. That's a principle in trading, imbalance. And, some people just trade imbalances. So you see that there was no opportunity for buyers to step in at certain levels in the chart. And nature likes balance, so it's going to balance that out, okay? This is why it's very likely that this level get filled, and it filled very quickly. And as I've been saying, I would not be surprised if we got something like this. A move above, whoops, let's zoom out for a second more. A move above this previous high, okay, to establish the higher high, establish the uptrend. Once that uptrend's established, then you can go ahead and retest that resistance that you just broke, okay? That's just how uptrends work. You break highs and you retest previous resistances as support, rinse and repeat, okay? And, not to look too far ahead. But what's the principle on leading diagonals? And we can go into the Elliott wave books. If you want me to go into that, I can do that. I can open up the Kindle. But I've done this before on the channel, so I'm not pulling this out of thin air. You take the first three of the waves, okay? So wave 1 through 3, the retracement of wave 4, and that should give you a target, most likely, of what you should anticipate at wave 5 at the 1618, okay? Again, it doesn't have to come to the 1618 and come to the 2236 or the 2618, but a minimum retracement for a leading diagonal is a 1618. Again, I would expect us to come up above this area just to make the higher high, right? And you just rinse and repeat. You rinse and repeat. And then you're going to do that same thing with your all-time high, so on and so forth. Do you see what I mean? So, yeah, that's basically what I'm seeing. I wouldn't be surprised if we just made the higher high right here. Maybe go to 70K, maybe not. I don't know. I have no clue. But that principle is consistent. You see it consistently throughout. Okay. Now, enough of the short-term price action. That's going to happen when it happens. And one of our edges is patience. looking at the larger trends, patiently waiting for them to play out. Obviously, we get a little bit of an inkling as to when that will happen using our moon phases, using time ratios, Fibonacci time ratios. But more or less, we got what we expected. Full moon on the 13th, pump. New moon, right? That signified a market high, okay? You have your market high on the 28th. And so in between, because we are in an uptrend, it's likely that we get some more positive price action because that's just the trend of the day, okay? Up until which point there's another full moon, and I think that full moon is going to come around the 15th, or the full moon is on the 11th, okay? But remember, it's about 0 to 3 days after the full moon, you can expect the market to rebound. So I wouldn't be surprised if we did something like this, came down and retraced for 10 or so days up until the 15th, where we then continued the trend to the upside. Okay, so you don't know for sure with time, but you can get a decent idea. Okay, some people are just throwing stuff out there and saying, well, we're not going to move until October because the Fed says this. That's not technical analysis, by the way. Anytime somebody says something that's outside of the charts, it's not technical analysis. Doesn't mean it's bad. It just means it's not technical analysis. It's maybe fundamental analysis, but good luck trying to match the words of the Fed and, Jerome Powell and what Nancy Pelosi is doing in China with what's happening in the charts. Good fucking luck. If anybody's figured that out, let me know. All right. So let's go into this whole 100K thing. All right. So to do this, I'm going to use this chart. I'm not going to use my long-term chart. I'm just going to hide this stuff right here. And I'm going to zoom out and turn on my log scale because we know we cannot faithfully represent high time frame price action without the log scale. So let's go on the weekly time frame. And here we go. Let's turn off the VPVR. It doesn't look good or work well on the log scale. Okay, so high time frame. This is the weekly chart. We almost, on this chart, you don't have Bitcoin from the beginning, but you're close, okay? You're close. You have Bitcoin when it was around $2, okay? That's close enough for what I want to illustrate, okay? I want to illustrate a trend here, okay? And very simply, you look at this, what do you notice? The first thing you notice is that we've got this line, which is called a parabola, okay? Anything that goes and it's not straight and it moves kind of in a curve. I don't know the technical definition, but it's a parabola. You guys all know what a parabola is, okay? And then I've connected this parabola at these vertices, okay? Every single one of these points was Bitcoin topping out, okay? It topped out here, down in 2011, I believe, yep. And it topped out once more in 2013, around $700. Topped out once more around 2017 at around $8,000 or $7,600. Then again in May of 2021, we all know, at around, damn it, what's the price here? Around 58,000, and then once again around 64,000 in November of 2021. Okay, every single time Bitcoin topped out, it followed this trend. If you had drawn this parabola, if you had known in the past, and somebody said, hey, this thing called Bitcoin, it's gonna be big, it's gonna keep going up, you're like, okay, cool, where's it gonna go? How is it gonna go up? And they gave you this trend line, you would have been a Brazilianaire just trading this, right? Because you would have known exactly when it was gonna top and when to get out, but you probably would not have known when to get back in, right? Because I didn't draw the trend down here. I'm not really concerned with the lows. I'm just concerned with the highs. Anyway, you would have been a shorting master, right? Because you would have known when to short the shit out of this trend. So essentially what I'm saying is that this parabolic trend line has faithfully represented every single Bitcoin top in its history. However, if we're able to break this trend, we should be in another stratosphere, quite literally, right? Because think about it. We've been following this trend, following this trend, following this trend. It seems after 10, 11 years, we've kind of petered out and the trend is sideways. It's no longer parabolic. It's kind of leveled out. Do you see what I mean? So I think at this point in time, it's either we break this and continue upwards in a new uptrend that can no longer be confined by this parabolic trend line, or we reject once more and come back down and repeat this price action over here. Do you guys see? So that parabola is very important for those reasons. Now, were we to break this parabola to the upside, where would we break it? This is why 100K is so important. Watch this. Okay, what I'm going to do is I'm going to simply take a... What am I going to do here? A few ways we can go about this. Here, let's try this. Let's try this. All right. Let's try the forecast tool. Actually, no, not the forecast tool. Let's try the ghost feed. Or is it bars pattern? Not exactly sure. I don't use it too often. I think it's the bars pattern. Yeah. Okay. Try the bars pattern. It's just a generic uptrend, okay? And see, I just did that in front of you. I hadn't done this in the past for this particular exercise. Okay, let's make it something more visible, more opaque. Okay, and I just took a generic uptrend that Bitcoin played out back in January of 2019, right, as part of this flat correction, right? And I superimposed it here. So let's say we did kind of go up in 5 waves. 1, 2, 3, 4, 5. Do you see that? Always goes up in 5, right? Look at what would happen. All right, first and foremost, we come up and hit that parabola. We top around April, February, or March or April, right? Thereabouts. And that's along the same lines of what I had said before. If you haven't seen my video, crypto in the next 4 to 7 months, I did, actually I have a date, February 19, 2023, for my projected top of the next market for Bitcoin, okay? That's just a projection, okay? It's not, it's going to happen. It's just, what I use as an analyst to kind of frame my plan and to just kind of make sense of things, okay? But anyway, this is close, right? This is April. And what's important is, where does this hit? Right at 100K. So the importance of 100K is this. So it's very likely that once we do hit 100K, we will reject. Now, question is, how will we reject? I do believe that for multiple reasons. One being that it's a strong psychological resistance, right? 100K for a long time with people not even being able to chart. It just represents another sphere of influence, of achievement for Bitcoin's price action, right? You're talking 6 figures in something that started only 10 years ago, right? Some 10 years ago, 10, 12 years ago. 6 figures per coin. That is huge, right? So psychologically, it's very strong. Many people are going to plan to sell at that number. And technically, you also see some confluence because it is very much in line with the next touch of this parabola, this parabolic growth that we've had since the beginning of Bitcoin's sort of trading on the open market. So if we come to 100K, it's likely that we're going to reject. Now, how are we going to reject? I believe that we're going to reject in a just a regular flat correction. But once that rejection is over, okay, something like this, and we proceed to break 100K, then that's when we really start a run that people cannot imagine, okay? And actually, I kind of confused myself and you maybe as to when that's likely to happen. I have this happening much sooner than April of 2023 for 100K. Because as you'll all know, if you follow this channel, I'm projecting the next top for Bitcoin to be 1.7 million, okay? So just have a quick look at my longer term projection. I'm going to just jump into the master plan here because timing's important. I don't want to, and I do have the parabola here as well. I forgot I did put it on here. Okay, so look at this. And actually, this is more precise. I like this better. All right, so the parabola here, instead of a solid white line, it's a dotted line, okay? And this is my Elliott wave count from the beginning, and I have us in minor wave 2 coming out to go into minor wave 3. That minor wave 3 hits 1.7 million. Let's see. Right? No, 1.7 million-ish. Here it has about 2 million, around 2 million perhaps. 1.7 to 2 million, okay? Because if you look and take the Fibonacci extension of wave 1, retracement of wave 2, you'll see that 1.53 is the 1618, and then 4.4 million is the 2. And we do expect wave 3 to end between the 1618 and the 2 Fibonacci extension. That's where it usually ends, okay? So we have this wave 3 ending right above the 1618. So that's believable. That is believable, okay? And the date I have, once again, is February 19, 2023, okay, for my top. And I basically used this channel to project that, as well as the Fibonacci time extension. I'm not going to talk about that right now. If you want to see more of that, just check out the video on the channel that says Bitcoin to 1.7 million or something like that. I forget I forget the exact title. But what's important here is look at where we cross this line of 100K, okay? And this is just a projection, so it's just a straight line. We know nothing goes into straight lines, right? You're going to have up and down price action. But just using the model, this is our point of sort of meeting this 100K. And it is in October of 2022, okay? And right now we're in August, right? August, September, October. That's in 2 or so months, okay? That's in 2 months. Can we hit 100K in 2 months? I mean, judging by what we've been doing, I would say hell no. But I'm just going by the... I'm not going to use like my emotions to answer that. I'm just going to use the model and the analysis. And the analysis says absolutely that is possible. Okay, if we do get there, I do anticipate a rejection, and that rejection would probably be a flat correction, taking you back down to all-time high, the current all-time high, right? So we would have something like this. Let me just put it in right. So something like this. Okay. Something like this. And then you get a 3-wave correction. We're probably, since it's the first, this would be wave 1, right? This would be a larger wave 1. You could expect a sharp correction all the way down back to 60K. Something like this. Okay, do you see that? I'm going to zoom in. I'm going to make this a little different color. I wouldn't be surprised if that's what we got once we hit 100K. And so yeah, my projection based off of this model is that the beginning of October is a likely target for 100K. But once we hit 100K, expect a massive sell-off back down to test the resistance of our previous all-time high, which is over here. Right? Remember, these resistances are best represented by levels, by by bands, not necessarily by lines. So I would expect something like this. Like, you come up, you hit that 100K, and then boom, sharp sell-off down to the base of this channel before continuation. Then once we breach that 100K, that's when the fireworks start, okay? Because whether you know it or not, it's been a psychological resistance for many people, right? Many institutions. Well, Bitcoin gets to 100K, I'll be, we'll have X amount of money. Or if Bitcoin never gets to 100K, I'll be X rich for, some retail investors. But just by judging by the charts, once Bitcoin hits 100K, not only do we break this parabolic trend that's been a 10, 11-year trend, which is massive, okay? But we also hit the middle of this channel. And if you know anything about GAN analysis or, just basic technical analysis, the middle of channels, which is the 50% level, where's my pen? Here. The middle of the channel, the 50% level, is crucial. If you breach the middle of a channel, you can expect to continue to the top of the channel. If you reject the middle of the channel, you can anticipate rejections back to the bottom of the channel if you don't hold support, right? So I could see us breaking 100K, right? Sometime in October, early October, coming to the middle of the channel, retesting that 11-year resistance or whatever as support, and then continuing up, okay? So that's my big sort of 1,000-foot view on 100K and why 100K is so important in the larger scheme of things. It's not just a round psychological number, but it is technically crucial to our continuation of this wave 3 impulse, okay? And to making these ridiculous, 7-figure targets for Bitcoin. Okay, so that's pretty much what I got on 100K, and that's why it is crucial. And I'm not surprised, nor should you be, that the psychological resistance it corroborates with the technical resistance. Because what are the charts? The charts are just simply people's emotions, their patterns of buying and selling over time. And so people make up these charts. People's actions make up these charts. They're not just, derived out of nothing. And so a lot of people have been thinking of 100K, talking about 100K. You shouldn't be surprised if you see 100K smack dab at a resistance, at a major resistance, an 11-year resistance that you got rejected off once, twice, and then now I think the third time you will also get rejected before breaking it the fourth time. Okay, so that's what I got. I'm gonna go into the chat for questions. Guys have any questions about that? Let me know. Okay, if there are no questions, then definitely let's go into the watch list really quickly, and then we'll call it a stream. All right, let's get off of log. Let's go back into the 4-hour time frame. And here we go. Actually, let's have a peek at the general watch list. Has anything done anything yet? Okay, we have a few movers, but nothing really. Nothing really. Okay, it's pretty much the deviations, like, 14% up and 8% down. I would call that pretty much consolidation, sideways price action. There's nothing to write home about there. And it's even more pronounced here in our watch list. Very little deviation past where you started yesterday at 8 p.m., right? Where the daily candle closed. You haven't done much. But I do think, just looking at the price action, it's very promising for continuation. Okay, so here we go. I'm back on the hourly time frame looking at Bitcoin. Looks like we're putting in a pivot here, it seems. Okay. All right, Cardano. Same thing. Looks like you're putting in a pivot here, right? It looks like, let's get our Fibonacci retracement tool. It's eyeballing this. Okay, looks like you are respecting that 618 level right here. And yeah, you can expect continuation. Like 1 time, 2 times, 3 times. You're respecting the 618, okay? And that means whatever happened before is probably going to continue. If it's an uptrend, then this retracement is going to proceed or to continue into an uptrend, okay? That's for Cardano. Bitcoin did not respect the 618, but we are at the bottom of a move. So at the bottom of moves, you can expect corrective price action, okay? And just to get into the weeds, since we have a little bit of time, I think it's important. Here's where you can get into the minutia of different moves. But remember, when you're trading, especially with size, you're not on a smaller time frame and you're not placing big bets on the accuracy of these reads. Okay, this is helpful to give you an idea as to what's going on, but trying to get corrective price action and chart it 100% without making an error is challenging. So it's not something I would recommend putting a lot of money behind. So I see this, like I said yesterday or 2 days ago, as a WXY XZ, okay? And one thing I said 2 days ago was that I thought this was the Z wave, the final impulsive wave, and I don't think that is anymore. I think this is part of the X wave, 1, 2, 3. So a 3-wave move, and then you come here 1, 2, 3, 4, 5. I'm going to show you that in a second. But the Z wave comes down like this. I think this makes more sense. So you have something like this. 1, 2, 3, 4, 5. Okay? So I think this is your 333 WXYXZ. And so from that point on, it's likely that you started this reversal, consolidation reversal pattern that you're still kind of in, right? So initial break of structure, A wave right here. Here, let's just label it. Since we are on the live stream, this is when we do all of this stuff. Okay, so this is my A wave, my initial break of structure targeting wave 4 of the previous trend. Boom. Now I need a counter to that, which is going to be a B wave, 3-wave trend, counter to my A wave. Boom. Okay. Let's change that color. Let's just make it blue. And then I need another degree of an A and a B. So here it looks like I have 3 waves up here for my second degree A wave. Let's make that purple. And this may just be my second degree B wave right here as a zigzag coming down. Okay, so it may or may not, but this is likely. Okay, what's important is not necessarily that this is 100% correct. What's important is that you get the idea, more or less, that you're in consolidation reversal, so you can anticipate a move up and out of this trend, right? The whole purpose of all of this, reading these corrective waves, is to identify the end of a trend, a correction. Because once you can identify the end of a correction, you can situate yourself to take advantage of the next impulse. So this WXYXZ followed by this consolidation reversal should yield a big move to the upside, okay? And just trying to chart this consolidation reversal gives you a decent idea as to when that can happen. That's the whole purpose of it, okay? That's, I think, is important to make clear, because if and I was once this trader, if you grow overconfident in your reads of this corrective price action, and reading corrective price action is low probability because there's so many probabilities and possibilities, permutations and combinations that price action can do in corrective price action. It's not smart to say, okay, I'm going to enter here, right, and then set my stops here. It's like, right, it could be a zigzag, it could be a flat, it could be, it's just, it's hard to say where the price is going to go. All you know with a higher degree of probability is that it's likely that you're in consolidation reversal and that this larger trend is finished, and that at some point soon you're going to get a reversal. So that's how I use it now in my in my experience, more experienced phase in my career. Okay, so that's what I'm seeing with Bitcoin. But with Cardano, for instance, this may also be true, and I say that this may also be true because that's not much of an impulse right here, right? And I think this is clearly 1, 2, 3 waves up, and then you have 3 waves down, except it's 3 waves up and 3 waves down in a zigzag that respects the 0.618 of that first uptrend. So I think that's your move up and out of that, okay? That's what I see in Cardano. In Dodo, I think you're also getting a zigzag. I would say this is a 3-wave move. You got some sort of correction down here, okay? It's unlikely that this is impulsive because it's just so short, it's so concerted. It's likely that this is still corrective, but it's corrective in the sense that it's a consolidation reversal out of this larger trend, right? Quote unquote larger. It's not larger. This is the smaller trend. This is the larger trend, right? So this is the correction. This is the consolidation reversal of this correction. That's what I meant. Okay. Ethereum, same thing. You're dealing with this trend, right? And like I did with Bitcoin, I would revise this into saying that this is my Z wave down here. Okay, I think that you put in 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. There we go. I would say this is the end of Z right here, not up here. I think this is 1, 2, 3 of X. This right here just threw me off. And I think that your consolidation reversal in Ethereum started over here with your, with your initial break of structure, your three-wave move right here. This is your counter B wave. This is your second degree of your AB base. This is your last degree, your second degree of the B wave, okay? And then a move up and out, which would form some sort of inverse triangle, or sorry, inverse, what do you call it? Head and shoulders, right? Inverse head and shoulders, okay? So let's do this. Let's get rid of this. Kadena, same thing, right? I think this is what you call a zigzag. 1, 2, 3 waves up, 3 waves down. The 3 waves down respect the 0.618 of the 3 waves up. And you can expect reversal right here. See? Okay, Litecoin, same thing. I think you're getting that move up. So same thing in many ways in Litecoin. I think you have your 333 W X Y X. I think it's a 3-wave move here, and then I think Z was 1, 2, 3. I think the third wave here. Let me just count this out more properly. It goes something like here: 1, 2. I think 3 is down here. 4, 5. Yeah. I think that's what you got in Litecoin. Right? You had your WXYXZ, just like in Bitcoin and in Ethereum, up here. WXY. That X2 was like 1, 2, 3 right here. And then your Z wave, your impulse comes down here. Okay? And so you have your consolidation reversal happening over here. Okay? Ravane, crazy Ravane. As usual with Ravane, I would just zoom out. This is a very volatile asset. Very hard to read on small time frames. I think this is what's clear about this right now is that you're in a sort of triangle. Okay? Or you left the triangle, but you were in a triangle. I think this is something that we can see more clearly now. This triangle pattern. I'm gonna go on log. It's that kind of asset. Okay, so this would be kind of a barrier triangle, if you will. Okay. And so I would expect this next move right here, you broke the triangle and you're retesting it, this next move to come up and meet this resistance up here. So this is what I'm seeing on Ravane. Let's reserve rights. Reserve rights, I still like this read a lot. This read is still my favorite right now. I think this is very, very clearly a wave. If it's not a wave 1, let's see. Yeah, I think this is wave 1. Okay, I think this is wave 1. So let me fix this, because I'm seeing this whole consolidation reversal since the May 12th orthodox low right here. I'm seeing this as your big A. So this is your first degree. Big A, big B. That's your first degree consolidation reversal. Your second degree, 1, 2, 3, small a, small b. Your impulse starts here in July. Okay, July 25th or so. That's when your impulse started in reserve rights. And I would say that, you know, just like these other impulses, you're respecting your 618. Look at that. You take your Fibonacci retracement tool from the bottom to the top. You have 5 waves, I think very clearly up. So you have, I would say 1, 2, 3, 4, 5. I think that's the count right there. Okay. Wave 3 is the longest. It doesn't have to be, but typically is. Wave 2 and wave 4 kind of retrace fine. They don't come into each other's territory, so it's a good count. And then following that, you have a 3-wave move here, which goes something like this. 1, let's see. Yeah. It's a zigzag. This is A, B, C. This is a zigzag, right? This is what I got for reserve rights. So you put in your 3 waves up, you put in your 3 waves down. This is your consolidation reversal right here for the next move. And the next move is likely to be what you should expect from wave 3. So if you take the bottom of wave 1, top of wave 1, retracement of wave 2, you should anticipate wave 3 to hit between the 1618 and the 2 Fibonacci extensions. Okay? And that would take you in this region right here, which is very, very expected, right? Because look, you have previous high here, okay? And if you came up here, it's likely that you're gonna come down and test this larger resistance that you just broke, okay? So let's zoom out for a second. And this is one of my shorter term trades. As a professional trader, there's certain trades I have that I use to pay for like mortgage and bills and stuff like that. Reserve rights is one of those. Not saying that this is not going to go for longer. If I didn't have to touch it, I wouldn't. Okay, just so you know, I only touch stuff that I need to, especially at the bottom of a larger trend. But so I'm trading this a little more aggressively because it's to pay bills. And yeah, I think that is a really good read there. Do you see that? So let's take this off. But just look at what's going on once you get into that that 1618 to 2 region. Let me put a rectangle here. Okay, you're getting a lot of resistance, okay, of previous price action. So right here, you get the top of this, right? It's just it makes geometric sense. You're pretty much forming a W pattern, okay? And so then after it's all said and done, you're probably going to retest this, consolidate, and then continue for your wave 5. That's what I'm seeing. So what I'm probably gonna do for reserve rights is I'm gonna sell the top of this move right here. I'm gonna look for the higher high because we're in an uptrend, right? So I'm going to expect price to come and break this high ever so slightly. So if I have to sell this asset, I'm going to sell at about 1.4 cents. And then I'm going to wait because it's very, very, very likely that wave 4 is sharp. Even though wave 4 is not usually sharp, it's typically shallow, right? But this is the first trend. This is the first rally, or this is the first positive impulse in a while, right? We're coming out of a bear market. And so I would not be surprised if we ended up getting a leading diagonal. I think Bitcoin's going to do that. I would be shocked if we didn't get that in this market as well. So here, let's get rid of this. Let me just do this. Okay, let me get rid of this stuff. And so this is what I think reserve rights is going to look like. Again, I said it this morning and I repeated it in the beginning of this live stream. You typically get these leading diagonals in new trends because most market participants don't believe in the validity of the new trend. So they're going to sell off into strength. So as soon as you get a pump, they're going to sell off. So wouldn't be surprised if not only wave 2 is sharp, but wave 3 or wave 4 rather would be sharp. And once again, you should be respecting the 0.618 of the previous uptrend, which I think we're going to be doing here. So I think, yeah, 14 cents thereabouts. I would say, 1.4 cents. 1.4 cents thereabouts. I think we go up, we come back down with a sharp wave 4 retracement, because this is significant resistance right here. Let's go on the daily. I'm on the log, so this is valid. But look at this. Looking at reserve rights, you see that 1, 2, 3 data points. We're going to hit resistance here, okay? We're going to hit resistance on the way up, but I think we break it initially. We're going to break it initially, and then we're going to come and retest it. We're going to have some resistance as we go up, but we're going to break it and then retest. That's an RS flip, all right? So I'm going to short-term sell this at 1.4 cents. I'm going to buy back once we get close back down to this region, okay? And then the end of the run, I think, is this trend right here. Do you see? 1, 2, 3. Actually, much more than that. Do you see? You have right here. So, like, this is good technical analysis, because you don't always want to just say, oh, I'm an Elliottician, so I'm only going to look at the Elliott waves or look at, the Gann analysis or whatever. Like, you want to look at what's in front of you, and different charts offer different opportunities for analysis. I think this chart is made for support and resistance, diagonal support and resistance. It's all over the place, right? You have your support here, resistance here, resistance here. This trend line is very important. Very likely that we find resistance once we get here, okay? Just as this trend line is very important, very likely we find resistance and then support on this trend line. So that's how I'm going to trade reserve rights with this count, okay? SHIB. I'm going to go back down on the hourly time frame. So SHIB is one of those that I think just put in, it's still stuck in its wave 2 correction. It never started its wave 3 correction, right? So I'd say SHIB went something like this. 1, 2, 3, 4, 5, I think. No, I think 5 ends here. Okay, 5 ends here. So we got that wave 1, and so you have a complex correction from here that goes something like this. W, 3 waves in W, 3 waves in X, 3 waves in Y, 3 waves in X, and then 1, 2, 3, 4, 5 waves in Z. Okay, that's what you can expect. And now you have your sort of consolidation reversal. Okay, so that's what I see in SHIB. Again, it's very likely that you get continuation into this wave 3, and just like Bitcoin, just like a lot of these other assets, look at this. I'm gonna just delete all this stuff. Look at what you're doing once you're breaking this. I mean, look at this. Like when I said Bitcoin is going to go into its major first, what did I say it? Its major rally in this new bull market. Its first major rally in this bull market. I mean, the same can be said with a lot of these assets. Look at SHIB. This is a textbook inverse head and shoulders. Textbook. Right? You got your left shoulder here. You got your head. And you've got your right shoulder. I mean, this is textbook. And this breaks, and it typically targets the height of the head from the neckline superimposed from the site of breakout, which would get you to this next target down here, or up here rather. Okay, so I think that's what you get in SHIB. A nice wave 3, and let's see what the Fibonacci levels show us for this. So if we take our Fibonacci extension tool from the bottom, let's see, what did we say was top? I think this was the top, right? Yeah, right here. Top of wave 1, retracement of wave 2. I think we get an extended wave 3 here. Okay, that extended wave 3 goes way past the 1618, a little up to the 2618, and you meet important resistance here. And this is important resistance because you're under all this price action. This is exactly where you would find some resistance. Okay, that if you're not on the log scale, let's see. Because I was on the log scale, I don't know that that was something you shouldn't do, just because SHIB is very volatile. Okay, but let's try this. Not on the log scale. Let's just take the height of the head once more from the neckline. Okay, yeah, once again, you get that extension way past the 1618 and the 2. I expect an extended wave 3 for SHIB. Okay, and more than likely to meet, let's just turn on our VPVR here, to meet these targets here. Okay, you can stop here, but I wouldn't be surprised if it came all the way up here. Yeah, so that's what I see for SHIB. Let's go into Telcoin. Let's turn off the VPVR. And guys, if you have any sort of coin suggestions or like requests, just put them in now, because once I finish this watch list, I'm just going to call it a stream. And Tel is the last one on the watch list. Hope you're having a great whatever day it is, Tuesday. And I hope you're not short. Even the trolls on Twitter are saying that we're going to 25K. That's when you know it's very likely that we go up. The trolls, the bearish trolls, okay? I'm not saying everybody who's a bear is a troll, not at all. But there's some, people on Twitter that they'll be like just really hyperbolic about it. They'll be like, Bitcoin to zero. I don't write the rules. And then, they'll say that for 3 tweets, and then the 4th tweet, they'll pull out some very lukewarm analysis. And they'll be like, you were warned. There will be no mercy. Just really obnoxious stuff. Like, it's funny, but at the same time, it's like, there's people that seriously follow that stuff and trade off of that stuff. Okay, let's see. So Litecoin, I'm also seeing us being in a wave. Let's see. Let me see. Did we respect the 618? Yes. Litecoin I'm seeing as being in a wave 2, like a really long wave 2. Okay, that wave 2 lasted forever. Let's see. I'd say that is clearly a 333. Okay, and those tend to be long consolidations. W, X. Actually, you know what? I'd say that's a 333. Here's why. It's a 333 for me, as I read it. Okay, could be wrong, but it's not that important. You just want more or less to understand the nature of the correction and to more or less gauge when it could be up. Okay, I see 1, 2, 3 waves in X right here, and then I see Y being your 1, 2, 3, 4, 5 wave move down, your diagonal move down. Okay, that's what I see. A WXY right there, done. Now it's consolidation reversal time. As to how long the consolidation reversal takes, I don't know. But from what we're reading here, we've gotten this A wave, B wave. This might be the start of the impulse right here. Or it may be a double zigzag. I don't know. That's corrective waves, right? It can take so many different types of, combinations, permutations. Hard to say for sure. But all I think I would say for, high probability is that right here, I ended a trend. My volume says so as well. Volume, capitulative volume, my trend ended. This is the start of my consolidation reversal, somewhere in there. So I'm getting ready for the previous trend, the larger trend, the trend in the larger degree to resume sometime soon. Okay? So again, this is the trend in the larger degree. This is the consolidation correction. I'm anticipating a continuation of the trend. This is how you trade, guys. Most people get confused and trapped and caught up in all this shit. This is not what makes you money. People who trade this and say, oh yeah, I was short and I'm gonna go short and add to my positions every time here. Like, this is like playing with fire if you while gargling gasoline or something. Like, it's like, what are you doing? Like, your small time frame corrections, you're trading small time frame corrections. That's like trading against the trend and trading complex corrective price action. Like, you're asking for it. Even if you're correct, you're asking to get smoked. I'm speaking from experience. I've done all this stupid shit. The smart thing to do is you ride these trends. You wait these trends out, or you just leave them. You don't do shit. And then you ride this. Even if you did nothing, you're still up. And you set your stops at crucial retracement points. And we always say here that the 0.618, your golden mean, your golden ratio, should hold all your trends. Meaning, if you're in an uptrend, you should be able to go up and retrace, but hold the 0.618 of this trend. If you can't, it's likely not an impulsive trend. You're likely in correction. You probably want to get out anyway. So just set your stops a little bit below the 0.618 to allow for any wicks, and just leave it alone. Leave it alone. You know what I learned the hard way is to try and get every single last bit. So, oh man, I'm going to trade this up, and then I'm going to trade this down or get out of my trade, and I'm going to try to get back in here. Like, just leave it. Just leave it. You're going to probably buy back higher than you sold here if you try to be cute about it. And if you try to short this, you're probably going to get wicked out, because this is chop. This is literally the definition of no trade zone for most professional, consistent traders. They don't touch this shit. Yeah? And it's a low time frame trade as well, right? The high time frame trade, the smart trade, you trade this, you'll leave it alone. You wait, you watch it go up. Watch it consolidate once more, and you watch it go up. If you're ever going to touch it, it's when you count 1, 2, 3, 4, 5 waves, because all impulses happen in 5 waves. If you ever will touch it, some, are still not going to touch it, but then you get your consolidation here, and that consolidation should once again, if that trend is true, respect the 0.618. And a trader that can afford to, and most really successful traders are still not going to touch it once it gets here, because it's all about your entry point. Your entry point is everything. Let's say you touched it and you got back in, you'd have to perfectly time this and get back in on this low, but then your entry point is really close, so then you're dealing with a high probability risk, or your trade is riskier, right? Because you've entered not down here or not down here, but closer to this. But if you entered here and you leave it, you're still safe. You just set your stops here just in case, but you're safe. You can trade with very little stress. I don't know. I think a lot of this you have to learn by experience. You don't understand what I'm saying maybe if you haven't gone sleepless nights watching your trades, waking up with sweats because, you're worried about price action or not being able to sleep, and, sometimes getting stopped out or liquidated or something. You won't know what I'm talking about, which is fine. If you don't trade, then that's fine, It's not for everyone. But I guess I'm talking to traders out there who are trying to make it and trying to, also be healthy, because that shit is so unhealthy. Trading corrective price action will literally shorten your life, and I'm not exaggerating. All right, that's pretty much it. I've gone through everything in our watch list, and yeah, those are all my thoughts, my ideas, my theses. Doesn't look like anything's really done much since we've started the stream. Bitcoin dominance is still puking. Welcome to alt season. Awesome. And that's pretty much it, guys. If you got value, like, share, and subscribe as usual. And have a great, what day is it? Tuesday. Have a great Tuesday. And I'll see you tomorrow for tomorrow's update. And by the way, let me just say now that in a couple weeks, I'm going to Disney World. So I'm going to fuck off for the first time ever since I started this channel, actually, because I've never taken a break. This is a daily show. I'm here daily, but I'm going to go on vacation for about a week. So you won't hear from me, but I'll tell you closer to that date. But yeah, I'm going to Disney World. I'm going to, take some time off, celebrate the new bull market, and just, be a human being for a bit. All right, that's it for me. Hope this was helpful. Hope this was useful. Like, share, and subscribe. Take care, guys. Bye.